Hey traders, Michael or Mini Frost here. You're here for another episode of Common Sense Market Analysis. Today's Thursday, August 28th, 2025. You're looking at a daily chart of the SPY or spiders, which is the proxy for the S&P 500. What do we have on the docket today? Well, she's up 0.35% and she's continuing to make new all-time highs. Going back to the weekly time frame, we are in a on-time situation. From this candle right here, this pivot low, if we count the candles to where we currently are right now, it's 21, and 21 is an important number. We're in an on-time situation. Not to mention we are still extended from home base, tinfoil hat event towards the end of next week. So we do have some things lining up that could potentially stop Mrs. Market from grinding up making new all-time highs, aka a little turn. But again, we have to look at both sides of the tape. We are above all the moving averages, so the trend is your friend. Taking this weekly big time breakdown candle high, we can see that last week she was trying to get underneath it. She spiked it by a little bit, but it's about how you close them, and she closed above the number, 639.85. So closing candles above is the bull case scenario, staying above the breakdown candle high. If we start to get below and start closing candles below, then we got some things starting to change. Not to mention we had that Irene number that we mentioned a few days ago. That number comes in at 632.08. As you can see, she came close, couldn't quite get there, and then bounced away and didn't look back. So the second time around, getting below 632.08, that is going to be a warning sign for a potential leg lower, possibly even spiking through the 50-period moving average on the daily time frame. Within this zone right here, the 639.85 being the front end, that is the big time breakdown candle high on the weekly chart, and then the 632.08 is the Irene number that we put on the board. So within this zone, there is some important stuff. You got the most recent breakup candle low. That's essentially going to be a spike of home base, the 20-period moving average, which we are becoming extended from. And then you have some unfinished business at 635.55. We can also call that a midpoint-ish number. So there is a lot of support within this zone, but getting below Irene and all of this stuff is a warning sign. As of right now, we're not really near any of this stuff. We're still continuing to grind up higher. But we do have to look at both sides of the tape because we are the umpires. So write these numbers down and put it on a sticky note. Today was an interesting day for inside the numbers. It wasn't necessarily a trader's type of day. It was a little bit more on the difficult side to get some day trades off today. But we still got a lot of important information to go over. Let's go ahead and start with the morning pivot at 646.60. Also, a few other numbers to mention. We had the overhead resistance number at 647.30 from yesterday. That number was still important for today. So let's start there. So right at the vertical line is today's activity. The pivot is in green. And then we have the first number of overhead resistance at 647.30 up above. We opened pretty much right on the number. The open was 647.27. There's a reason why she opened at that number. We don't need to understand the reason. All we know is that that number was important, magnetic, and overhead resistance. She tried to get going. She almost made it to the back end of the resistance zone. Couldn't quite get there. She made her way later on in the day. We'll get to that in a moment. But she came right back down. And take a look at this 646.60 number. This was the pivot. She hit it once, twice, 3, 4, 5. And then got back above it, kept testing it on the downside. So all in all, this pivot was very important today. Used it as resistance on the way back up, used it as support on the way back down. We were a bit more on the conservative side today, waiting for a number that we had lower, couldn't quite get there. So we just let it be. We're not going to chase the market. We're not going to create trades out of thin air. It was a little bit hard with the price action early in the morning, but that doesn't mean we still got some good stuff in here. Sticking with the 0 dark 30 notes, this is before the market even opens. If we get above 647.30, she can make her way towards the back end of the overhead resistance zone at 648.40. That entire zone right here in uncharted territory, a place where the market has never been before, at new all-time highs, this zone was important. Look at this, back end of the resistance zone, 648.40. She made a high, of 648.42. Spiked it by 2 cents. We'll give that a funny how that works. Again, in new uncharted territory. And we're still nailing the numbers to the penny. If traders were willing to take a stab at it, she pretty much provided you a stand-up double, almost gave you a buck. Hit it to the penny right here, came back up, came up a few cents short the second time around, and then came right back down. And then eventually we started hovering over the number, closing candles above it, using the number as support. We take note of that when the market is trying to make another move, closing candles above, she's building up energy for another move higher. Where is that higher stop? If we continue to push higher, the next overhead resistance place is towards 649.20, and then the big fat semi-round number at 650. I mean, guys, it really doesn't get any better than this. 649.20, right here, she made a high of 649.25, provided you a base hit, bare minimum, tried getting above it once more, and then some institutional participation in the last 5 minutes of the day, coming right back down, essentially to the midpoint between the two numbers. But who else is providing you the numbers at new all-time highs being this accurate? Do you know your numbers? Do you know the pivot? Do you know the numbers when we're at new all-time highs? These are all things that you need to be aware about if you're trading the S&P or basically any of the other markets. If you are, and you don't have a game plan, and you don't have the numbers, I highly recommend you come out and give Inside the Numbers in the live room a shot. You won't be disappointed. We got numbers for the S&P, Qs, IWM, gold, Bitcoin, crude. There's an opportunity around the corner for everybody. And not only that, we do have a list of stocks on the move every single day. Today we had 3. NVIDIA was actually on the board, but never hit its entry target today. As you can see, it still says open. But take a look, Urban Outfitters, URBN, did hit its entry target, so let's go take a look at what happened. Entry number 1, 73.52. Entry number 2, 72.42. Here's Urban Outfitters. We got the first number on the board at 73.52. And take a look at this. Pretty much on the freaking dot. Spiked it by a few cents. We don't split hairs over pennies. Safe to say that the numbers work. We'll give that a funny how that works. And she gave you a nice bounce, almost $2.50, made a high of 76 bucks. How do you like dem apples? And then she came back down, started using this number as resistance once we got below it, and then she fell. But at this point, the trade was already over. We don't let the trade go bad on us, especially when we booked some profit in our pockets. That's how we treat it as a business. So you can pause the video, read the notes, and go back to the chart to double check the work. It's all in here, everything that you need to be a successful trader, trading the S&P or any of the other stuff that we offer. Take a look down below. We got a list of 12 different markets with support and resistance numbers. And I challenge you to put a few of these numbers on the board and see how they played out. You'd be surprised. Actually, it's not that surprising because the numbers work. Speaking about how the numbers work, we're looking at Camp IWM on an hourly time frame on the extended hours. I gave you a number for IWM early in the week. Already mentioned it to you guys a few times. That number was at 237.77. I kept saying that this is a place where the market shouldn't just waltz right through. As you could see in the pre-market activity, we opened up close to the number, pretty much hit it on the dot. She made a high of 237.85. That's close enough. And as expected, she came right back down. How you doing? I gave you that number for the free. Looks like we had one player, Benny and brother, 237.85. That was the high. Close enough. Thank you for your work. Well, Bill, thank you for letting me know. Keep up the great work. Thank you for the message. By the way, before we get into the technical analysis of the other markets, if you could do me a quick favor and just like the video and subscribe, that would mean the absolute world because it does help me and the channel out a lot. All right, moving on for Camp IWM, what do we got? Well, she's up 0.12%. In the regular trading hours, we didn't quite get to the 237.77. She can still come into the number, possibly even a spike of the number since we already got there in the pre-market. But this number is still important. Taking a look at the weekly chart, we are extended from home base by a lot. Take a look at what happened last week, by the way. Here's this big time breakdown candle high, the most recent one. Also coincides with this one right here as well. This is an important area as we were eating time off the clock around this area for a few weeks. This is the weekly time frame. And then not to mention we had some big moves right here. Big move down at this number after the rebound. And then we played around with it, some consolidation, and then we made our move down. So all in all, this area is important. And as you could see last week, she came back down to retest the big time breakdown candle high, spiked it by a little bit, but closing candles above and staying above is the bull case scenario. That is bullish behavior. So just like we talked about with the S&P, the IWM is doing the same thing. All charts act and react the same way. I put up another number on the board. That number comes in at 241.38. It's this big time breakdown candle high on the weekly chart, a stone's throw away, pretty close to all-time highs. The all-time high actually comes in at 244.46, but within this overhead resistance zone, and again, it could also be the midpoint of the two numbers, this is an important area and a place where the market shouldn't just waltz right through. What about the transportation department? I feel like a broken record saying this number over and over again, 16,000, the big fat round number, but I have to keep talking about it because it's still important and it's continuing to still show people that it's important. She's having a tough time getting going, getting above the big fat round number. Today we went for another retest of it, made a high of 16,015, couldn't quite make her way above. Doesn't mean she can't get above tomorrow, but the more time we spend below this number, closing candles below, she's going to want to run a test of the most recent breakup candle low that's right in the midpoint of the trifecta of the moving averages and very close to this unfinished business down below right here, the unfilled gap. Again, right in the trifecta of the moving averages. So if we can't make our way above 16,000, that will be the next destination. But the other side to it is if we do get above 16,000 and start closing candles above, and using it as support on the way back down, the next destination is going to be the next breakdown candle high in the sequence that comes in at 16,331, unfilled gap right here. This is an important area, but that's only if we can manage to close candles above 16,000 and get going. But she's up 0.11% on the day, really not that much activity throughout the last 3 days in the transportation department. Tuesday was 0.31%, yesterday was 0.14, today is 0.11. So really, she's kind of just eating time off the clock, waiting to show her hand. What about the Q people? She's up 0.63%, continuing to close candles above the 20-period moving average. Therefore, above all the moving averages, the trend is your friend. The next destination was the most recent breakdown candle high, which we were able to make it to today. Since I already showed you guys this table, might as well go over some numbers. Looking at the Qs, take a look at resistance number 3. Pretty sure we opened above R1, kept moving up past R2, but then take a look at R3, 576.40. This is why I encourage you guys to put some of these numbers up on your charts. 576.40. Spiked it by a few cents and ripped it right back down in the other direction. Came up again, spiked it by a little bit, wasn't able to get going, and then came right back down. And then eventually we did get over it, started to close candles above, as you could see, hanging around this number, closing candles above, trying to make her way to the next number in the sequence. So I really urge you to put some of these numbers up on your charts and see how the numbers played out. In conclusion, the numbers work. So right now she is at an important overhead resistance number. We'll see how she treats it tomorrow as the week comes to a close. That number being the most recent breakdown candle high. Remember, it's about how you close them. And Friday's coming up tomorrow, so the week is coming to a close. Just taking a look at the weekly chart, extended from home base. But there's nothing wrong with the chart. And that's why we need to be the umpires looking at it with an unbiased perspective, looking at both sides of the tape. She's above all the moving averages, there's nothing wrong with the chart, and we'll just take it at face value. What about XLF? She's up 0.13%, continuing to grind up higher. We have a common theme of a lot of different markets being very extended from home base, and markets don't like to be too extended from home base. Take a look at right here, for example. I would say that's around the same distance that we are, even further actually, to home base. And look what happened. We're extended from it, very extended, at new all-time highs. And what'd she do? She made a test to home base. That's normal behavior for the market. They don't like to be too extended from home base, which is why sooner or later, and again, it doesn't have to be tomorrow, it doesn't have to be next week, but we are going to have to revisit home base. And we're in a very similar theme across multiple markets being extended from the 20-period moving average on the daily and weekly charts. And as you guys know, those charts take precedent over the smaller time frames. The bigger time frames are more dominant, they're more powerful. We pay attention to them more than the smaller time frames because they give us the bigger picture of what's really happening. But again, we're above all the moving averages. The trend is your friend. She continues to grind up higher, making new all-time highs. There's nothing wrong with the chart. Therefore, there's nothing wrong with the financials. And if there's nothing wrong with the financials, then it's highly unlikely that there's nothing wrong with the overall structure of the market. Last but not least, we got SMH shaking my head, the semiconductors, smash mouth. She's up 0.41%, closing candles above the most recent breakdown candle high, and closing candles above the 20-period moving average. As you can see today, let's go put a line on the high of this breakdown candle. She spiked it, went for a little retest, but still managing to close candles above it. That is bullish behavior. Once more, the common theme across multiple markets, very extended from home base. This is something to mention, and we don't usually take a look at monthly charts. They really don't change a lot because they're such a large time frame. It's good to look at them from time to time. So here's what we got. Extended from home base, but then take a look at right here. We were consolidating around this area for a while. This is a monthly chart, so each candle represents a month, and we were eating time off the clock for what seems like half a year, probably even more. So again, just from normal garden variety behavior and market patterns and consolidation periods, we know that markets like to come back and retest those areas. So this will be an important area that the market would most likely want to revisit. Not only that, but remember, we try to build the full stack. So what else do we got? We got this big time breakup candle low right here. That also coincides with the 20-period moving average, which we are extended from. So we got the 20-period moving average, this breakup candle low, also in the vicinity of this consolidation period. So all in all, this is an important area, and this is on a monthly chart. So the bigger time frames take more precedent over the smaller time frames. So again, we don't know when she's going to want to come back and possibly retest this area. We're almost $60 away from it, so we're pretty far away. It's not something to worry about right now, but it's just something to put in our back pockets. But take a look at this. We had a big move up. That's the flagpole. We had this consolidation period, creating the flag, a bullish flaggish situation. But look, she was eating time off the clock, waiting for the 20-period moving average to creep on up. But eventually, we did come back into it, almost getting to the 50-period moving average on the monthly time frame. So she had a bullish flaggish situation forming, but she had some downside behavior, taking care of some unfinished business down below. So generally speaking, this consolidation period would be eating time off the clock, building up energy, recocking the gun for another move higher. And we did get that move higher, but not until after we made a test of the 20-period moving average. Now we're on a weekly chart, and it kind of looks like the same situation. Here's our flagpole. We got eating time off the clock around this area, waiting for the 20-period moving average to creep on up, just like we did on the monthly chart in that area. But before we got the move higher, because she's resetting the energy within itself for another move higher, again, recocking the gun, but she didn't make that move until she had a visit of the 20-period moving average, and also even almost getting to the 50-period moving average. So I think that's some puzzle piece information that we can put on the table and put it in our back pocket. Have I told you guys how much I appreciate each and every one of you? Without you guys, these videos or MSF would not be possible. That is true and accurate information. Put it on a sticky note. We're going to pull the ripcord for today. Thank you all so much for tuning in for another episode of Common Sense Market Analysis. I'm Mini Frost. Don't forget to like, comment, subscribe, all that good stuff as it helps me and the channel out. That would be greatly appreciated. Thank you all so much for another great week. You guys are the best. We'll be back ready to go in uniform for tomorrow's morning session. Not to mention, just some housekeeping stuff. The market is going to be closed on Monday. We got Labor Day on deck, so enjoy the 3-day weekend. Also, not to mention, you could get the next free swing trade from our Lazy Swing Trader system if you click the link in the description below, by the way. So again, thank you all so much for your continued love and support. We'll be back ready to go on Tuesday. I hope everyone has a great Labor Day. Enjoy the 3-day weekend. You guys all deserve it. Stay safe and take care now.